Assalamualaikum warahmatullahi taala wabarakatuh. Hello to all of you. I'm going to show you the calculation for residential home loan, one of the main components in your fact finding sheet, and this information is located in the net worth statement. It is related to long-term liabilities, very much particularly focus on the residential home loan. And in this calculation also, it is important for you to set this calculation, because later on you are going to use the figure on the market value in the personal use asset column in the net worth statement. Okay, now I'll give you an example for the residential home loan. You go to the price. Let's say the price is 350,000 and the down payment is 70,000 and the financing years is 25 years. Alright, and the balance of the financing, because the price is 350,000, your client managed to get 70,000 for the down payment, so the remaining of 280,000, this will be financed to the bank. And the purchase year, it has been 6 years already. The house has been bought 6 years ago, and the current market value is 540,000, and this is the figure, the market value, that you should include in the personal use asset in the fact finding sheet net worth statement. I show you the location or the place. Alright, so as in this is the fact finding sheet for net worth statement. You can see that the personal use asset, the owner occupied residential, is 540,000, and all of these elements are in the form of market value, okay, in the column of personal use asset. Alright, back to the discussion. The purchase here, it has been purchased 6 years ago. The market value is 540,000, and the interest rate of the finance or the housing loan is actually 4.4%. So in the first place, we have to calculate the monthly payment. So you go to the financial calculator, CMPD set as N is 300 or 25 years times with 12 months, so N is 300. I is 4.4 divide with 12. The PV is 280,000. You go to the PMT and solve, and you can get the monthly payment or monthly installment is 1540. And you continue with the AMRT function in your calculator. You set N. The payment 1 is 1. Okay, payment 2 is 72, because this is a loan amortization for 6 years in our calculation, because purchase year, it has been bought 6 years ago, so the payment PM1 is 1, payment 2 is 72, means that 6 years or 72 months. How you calculate this? 12 times with 6 years. N is 300. I 0.3666, similar to this one. The PV is 280,000. The payment is 1540. PY and CY both 1. And you you scroll down, and you can see the balance. This is the outstanding balance function, where you should solve for this, and you can get the value of outstanding balance of 237,746. You scroll down again, and you can see the total interest paid, okay, the sum of the interest paid, and you solve, and you can get the total interest paid as 68,652 for this 6 years. This is the interest paid that you have made over the 6 years period. And the total principal that has been paid, you go to this symbol, total principal, and you solve, and you can get the 42,253.39. That is actually the total principal paid to the bank so far up to the 6 years. Okay, and if you add all of them. These are basically the amount that you need to pay to the bank for the financing of 280,000 for the interest rate of 4.4% over 25 years. So in your calculation, you need to show this detail, as well as this detail you have to put it in writing. I put it in handwriting, but you have to put it in a proper Microsoft Word format. Thank you very much. Assalamualaikum and bye bye.